I started my career and ended my career managing tens of billions of dollars, and that all took 1 billion seconds. Me and my partners, we knew how to lend money on real estate. Those skill sets have to convince an investor to put money with you. This is the structure that I believe for entrepreneurs, if they want to expand something, it's the easiest thing in the world to do under this structure. Tennessee, born, moved to Las Vegas when I was about 5 and raised in North Las Vegas. My dad actually worked in the famous Area 51 for years. Never talked about it, but he worked there. And so I graduated there and went to college and started my first company. So that's how it kind of went. When I was a child, I was drawn to leadership positions in sports, really. That's how it began. Without sports, I don't think I would have been a leader in life. I played every sport you can imagine because I just wanted to play sports. So I played track and football and wrestling and baseball and swimming and diving and tennis, and I did it all, yeah. I was a slow student. I was a slow reader, and the only way I knew I was going to make it, I had to work for myself. It wasn't like I could go the corporate route and kind of claw my way through. I just knew I didn't have that skill set. And I loathed thinking about once a year, sitting in front of my superior, begging for a 2 or 3% raise and allowing someone to decide whether I get 2 or 3%. And I was like, no, I'm done with that. I'm going to decide what I get, what my raise is this year, what my raise or what my decrease in salary is. I'm going to decide by performance. I could only have one path of success of my personality, and that was owning my own business. There was no other path of success for me. I would fail in those because it's just my personality. Finally, right out of college, we started, it was 1989, and the Soviet Union had fallen. For some reason, the kids in Soviet Union, they loved anything made in USA. And we found out that people were going to pay, they would pay $100 for a pair of Levi 501 button-fly jeans. And so we started collecting used. I had seamstresses all day long repairing jeans. I had guys scrubbing jeans, getting tar stains off of them. My 2 partners eventually moved to southern Germany, and they were selling used jeans all through Europe and Eastern Europe. And I was here in the States supplying, and we did that for about 9 years. So anything you want to do large in life, I think you have to have a team. And so I didn't want to scrub jeans, but I could hire people to do it. I didn't know how to sew jeans and repair, but I could find people to do it. I needed great salesmen my partners that could sell jeans around the world, around the globe. And so there's lots of moving parts, just like on a football team, just like on any kind of team sport. There's a lot of different skill sets. And I recognized early in life, I'm a good salesman. I'm not a great salesman. And so I needed great salesmen. And I'm a good at certain things, but I'm not great. And so therefore, I got to bring in greatness to be a great company. When you're running a large fund or a large company, you have to understand how team works. And if you can't understand the true meaning of team, then you're going to fail, I believe, because you have to have other skill sets. A quarterback cannot catch a long ball, and a quarterback doesn't really tackle that well. So you have to have different skill sets, but they have to work together. And that is part of, I believe, running a great company is a great team. When a team or a company is young, you do everything. You go out on sales calls, you go out on supply runs, you go talk to suppliers, you go talk to customers, you do the accounting. Everyone does a little bit of everything when you're a small company. But as you get larger and grow and scale into a larger enterprise, you have to specialize in certain areas and allow people that only want to focus on one single thing, and they have extreme skill sets in one single thing. Let them focus on those things and remove the responsibilities from those people that they don't want to focus on. So if you have somebody that's just an incredible salesperson, you don't want them attending operational meetings and talking about what are we going to do for HR this week, and are we going to have HR training, or are we going to have a Christmas party or holiday party. You don't want them in meetings like that. You want them to focus on sales because they are extremely great salespeople. And therefore, why would you, when you're running a big company, why would you detract them from their specialty? I started 14 businesses in my lifetime. 3 I've made money on, 3 I've lost money on. And the rest of the middle, they kind of all worked out. They were kind of all great, money makers. But failed businesses are, I don't want to go to any specific one, but failed businesses sometimes is timing. You just are the wrong timing in the market. Sometimes it's just operator error. You made some error. And then sometimes it's just you didn't analyze the risk properly. And one of the businesses that I hound on a lot is we were selling product into Mexico in 1995, and we had just started this business, and the Mexico peso was devalued in one day. It went 50% one day. And a week later, we were out of business. If we would have started that business 10 years earlier, we could have survived that currency exchange reset. But we were only started a few months before that, and it took us a year to get that business going. And so it just crushed us, and we had to close that business. That was a failure. That was a timing, and we didn't want to see the risk. We ignored or didn't hedge against currency risk in that business. The US dollar is, in this day and age, in the last 50 years, has been a thing to study and follow, how it's marketed and how it's prolificated around the world. And so that was one of the issues that we had with one of my businesses, currency exchange risk. My first business had gone, we'd sold it, kind of died in 1997, 98. And so in 1999, I'm watching a news reporter vilify fund managers in New York, hedge fund managers. And she's saying, she was on the newscast and she was saying they make a lot of money and they pay way less in taxes than the normal person. And I wasn't one to vilify them. I was like, I want to be one of those people. That sounds fantastic. Make a lot of money and pay low taxes. And so I said, I'm going to start my own fund. But I didn't tell anyone this because if you would have known me back then, you would have said, John, you're going to be a hedge fund manager? They'd laughed at me. But anyway, over those next 5 years, it took me 5 years to launch my first fund in 2004. Over those 5 years, I got my Series 7 stockbroker's license, was a manager of a proprietary trading firm, and I was actually the supervisor of 14 stockbrokers. I started selling mortgages for a while, and eventually after that I got my Series 65, which is an investment advisor license, and I read private placement memorandums, which is called PPMs, limited partnership agreements, LPAs, and subscription documents over and over and over, trying to understand and figure out how to run a fund, how a fund works. When you call a stockbroker, they must have a Series 7 license from the SEC, FINRA, whatever, to establish a business where they can sell securities for you or buy securities for you, and they can make a commission. That's a Series 7. So if you're buying and selling securities and you want to get paid for it, you need a Series 7 license in the United States of America. It took me about a month and a half to study for the Series 7. Yeah, and I mean, not study at nights. I was studying all day. It took me a long time because I'm a slow reader. And look, the securities laws are very complicated. But when I read something slow, I kind of remember. I have great retention, but it's really slow retention. Managing a bunch of professionals that have passed the Series 7 when I was managing the 14 stockbrokers, it was delight. It was fun because you're dealing with professionals. And anytime you have a team of professionals, they have earned the right to be in that room wherever you're at. And that's so fun to be around people that know what they're talking about and can problem solve. And that's the part about building a team or having a team effort. When you have people around you that know how to methodically get through problems. And that's what I loved about it. So Series 65 is an investment advisory license. And that is a way that you can make money on advising people to buy and sell securities. You're not making commission, you're getting an advisory fee. When you do mortgages, you don't have a Series 65 or a Series 7. Those are two different licenses. In the states that I was in, I didn't need a license at the time, but now after 2008, you have to get a license to sell mortgages to individuals. And so I didn't have a license back then, but I wanted to learn how mortgages work. I always knew kind of how mortgages worked, but I really didn't know until you actually sell them and you understand all the back commissions and all the back payments and how it all works. And so to really understand it, because again, I was going to launch a fund in 5 years. And so I need to understand how the stocks work. I need to understand securities. I need to understand real estate mortgages, debt, the financing, all that before I had enough confidence to launch my first fund. And that was all just driving me. Oh, I was making a little money here and there. I was making money, but I was driving to a point where I had a confidence and the knowledge where I could say, I'm now launching a private equity fund. Would you like to invest? And I have the team, the knowledge to operate a private equity fund. And that took 5 years from 1999 till 2004. Basic mortgage is, I want to buy a $100,000 house. I don't have $100,000. Can I get someone to lend me some money to buy a house? Yes, I can. Okay, how much will you lend me? Will you lend me $100,000 to buy a $100,000 house? No. Will you lend me $70,000? Yeah, I'd probably lend $70,000. So if you come to the table with $30,000, your down payment, that is where you come in as your equity. And so there's a debt investor and an equity investor. In this case, I would be the equity investor putting in $30,000 for a $100,000 house, and you would be the debt investor, the bank, putting in $70,000. In the capital stack, you're in first position. I'm in second position. If anything goes wrong with this property, guess what? When we sell the property, you get paid first, and when all of your money's paid up, the capital stack, the waterfall goes to you until your bucket is full. You don't need any more money. Then if there's anything left over, I get my money back, the $30,000. And then if we made money, we sold the house for $110,000, then the equity partner, the capital stack, receives the $10,000 extra. So we bought for $100,000, we sold for $110,000. In the capital stack, we'd have the mortgage company that lent the money, me as the owner, I put the $30,000 in, and then I would be the equity at the back end making the profit. That's how a capital stack works. The capital stack and how to negotiate and understand the position of each person in each capital stack, their position, was invaluable to me understanding how to launch my first fund. And that's why I really wanted to learn how mortgages worked. So I understood the lingo, I understand the strategy, and I understand the position of the borrower. So I took that basic mortgage scenario and I assumed that business owners do kind of the same thing. When you go drive down the street of any town these days, there's a loan company. There's a company that will loan you a paycheck loan. And I said, man, there's a lot of loan companies for paychecks. But what I realized in that 5 years of building my first fund is businesses do the exact same thing people do. For instance, there's a guy who can build 10 houses. So he's building 10 houses, but he doesn't build 10 houses. No, he builds 12. He doesn't have enough money to build 12, but he does it. I don't know why he does it, he does it. And something happens where he knows in 2 weeks he doesn't have enough money for payroll. And so he needs a short-term lender to give him a loan so he can meet payroll. And so my first fund in 2004, that I started with another partner, we started lending to business owners that needed short-term financing, a loan for 1 to 6 months. And so all we needed was, we were asset-based lenders. Does this builder that's building these 12 houses, does he have any type of property that I can put a first mortgage on? I can be in first position. I can be in the cap stack first. And so the guy says, yes, I have this property way over here. It's all paid for. Great. What's it worth? It's worth about $400,000. Great. We'll lend you $200,000. Your payroll's about $200,000. We'll lend you $200,000. We'll go to the title company. We'll put a lien on that property. We're in first position. And so that over the next 3 to 6 months, when you get your payroll paid and you sell some of your houses you're building, you can pay us back the $200,000 plus interest and fees, and then we will release our lien on that one property you gave us. This happens all the time in business. Businesses big and small all over the country, they just need short-term financing, just like individuals need, and that's why there's so many check cashing stores. And my first fund, we could do things that banks could not do. We could do loans within 7 days. A bank can't do that. You can't knock on a bank's door and 7 days later they write you a check and you got a loan. They just don't have the personnel or the time to do that. We, at my firm, and our firm, I should say, with my partners, we were able to drop everything, travel to the city, understand the asset, put the asset under a due diligence process, complete the due diligence process, get the money in a place where we could lend it, send it to a title company, have title insurance, and put a lien on that property, sometimes within 7 days, allowing the guy or the lady who needs short-term financing that money that they could use to keep their other business going while they used one of their assets as collateral for a short-term loan. And we built our first 2 funds in 2004 and in 2007 on that model. Business people that are building strip malls or they're building housing tracts or whatever, they're in late stage entitlement for land. My partners, who are brilliant, we just specialized in those short-term lending. So how did me learning mortgages help me start my first fund? It was a mortgage just expanded. It was a mortgage scaled to a larger level. But I had to, the difference is in a mortgage, you don't go to a bank, you go to a fund, a private equity fund, and they have talked to their investors for the last 6 months. They have accumulated a bunch of money over here, ready for you to walk in the door and say, I need a loan in 7 days. So all that prep has been sitting there waiting for you, waiting for a customer that says, oh my gosh, I can't believe it. I need to meet payroll next Friday. How am I going to do that? And therefore, that's what my fund, or our fund, me and my partner's funds in 2004 and 2007, that's what we did to fulfill a niche in the market, which is an important niche for people who just get behind a few weeks or a few months on their cash flow. When I heard about what a hedge fund manager was and the qualifications there, I just knew I could do that. I knew I had the skill set to do that job. I knew I could do it. I just had to get the right skill sets, meaning the team assembled that could really underwrite risk, could really establish what risk was. And therefore, I would be protecting my investors with my partners that I had assembled, because I knew they could manage risk. And that's what part of running a fund is managing risk. The day you start a business, you take on risk. You can never eliminate risk, ever. You can only mitigate it. And so that's what running a business, part of it's about, mitigating risk. And that's what a lot of running a hedge fund or a fund is, mitigating risk. And the investors behind you that have given you all this money, they believe in you and your team, how you mitigate risk to create a profit for their capital. That's the essence of a private equity fund. So most entrepreneurs in the world, they know how to run, let's say, a retirement home or let's say a funeral home. Their dad ran the funeral home. The dad died. The kid took over. He's been running funeral homes his whole life. He knows how to do it in his sleep, okay? And he believes he could run 10 or 20 or 30 if he had the right money. He has the personnel, the training, the experience, and the only thing stopping him from running 60 retirement homes in 5 states really is money and time. That is the type of person who should consider becoming a fund manager, a funeral home fund. And so he would go out to investors and say, listen, you guys all know I've been running funeral homes all my life. They're very profitable, but I know how to run more. Would you like to invest in my fund? And then we'll go out and purchase and operate and run these funeral homes. And over time, we're going to receive profit. We're going to split the profit. You're going to get the profit for putting in the money. I'm going to get the profit for putting in the time and the expertise. And over time, we might accumulate 60, 80 retirement homes. And guess what? Large funds out of New York, they need to deploy large amounts of capital. They can't come around and buy one funeral home at a time. They have they run, retirement funds and pension plans for these huge companies. They have to deploy millions and millions at one time. And they will pay a premium to pick up 60 retirement homes at one time rather than have to piecemeal it and build it over 5 or 6 years. And therefore, we can accumulate these, run them right, and sell them at a premium. And that is the kind of the end game sometimes to someone who has a small business but knows they can do more. I've seen people in the industry, they know how to run almond farms, and they start an almond farm fund. It's happened. I know people that do arbitrage financing between large biotech companies and small biotech companies. The large biotech company is going to buy the small biotech company for $5 billion, but they're going to pay them $1 billion a year for 5 years. The small biotech company needs money now for R&D and to expand. So this one fund comes in the middle, and they pay the small biotech company $4 billion today, and they collect the $1 billion a year from the big biotech company, and over 5 years, they make $1 billion. There are thousands of different models for a fund, but the point I'm trying to get to you is, if you have a knowledge in the business, and let's just say you know how to run hot dog stands better than anyone else on the planet, but you can only run 4 with your money and your personnel, but you know how to do it. You know how to do it. You know how to buy bread cheaper. You know how to buy the stands and the wheels, the little machines that take your credit card. You know how to do it better, and you want to run 5,000, then maybe a fund model is for you, because a fund model scales. All my previous 13 businesses, I got them to a certain level. They were doing great. Most of them anyway. I had the 3 that lost money, but most of them. And I couldn't scale them, right? A dentist has 1 dental office, maybe 2. And he can't scale. He can't go further. There's not a mechanism, there's not a structure to scale. A great dentist could start his own fund by saying, I'm going to drill teeth 2 days a week, and I'm going to build my fund 3 days a week or 4 days a week. And over 5 or 6 years, he could be running and owning 60 to 80 dental offices around 5 states. That's a fund. That's why you need the fund structure, and that's why America is the greatest place in the world for an entrepreneur, because America is the most fertile soil. Listen, I don't know if America, we're the best at math. I don't know if we're the best readers, but I do know one thing. The day you were born in America, or the day you moved to America and you're an entrepreneur, that's your lottery ticket. You won the lottery that day. And so as an entrepreneur, this is the best country in the world, in all of world history, to be an entrepreneur. We have financing. We have people who can start selling used blue jeans and end up managing billions of dollars. It happens every day, and you just can't waste your lottery ticket. And that's why I love America and the entrepreneurialism and the setup, the fertile soil that allows people to be an entrepreneur in the United States of America.